Hello, and welcome to the latest issue of the PIT, Personal Investment Tools. My name is Lundy Hill. I am not a financial advisor, and this is not financial advice. Past performance is not necessarily indicative of future results. Today, we've got an exciting episode about trading range expansion bars, classical technical analysis tool range expansion bars. And specifically, we're going to be talking about the silver futures markets. Please note this is for paper trading only. A range expansion bar is a bar which is wider than the previous X number of bars, usually 3 or more bars. I like to use candlestick charts, and I like to pay particular attention to just the bodies of the candlestick chart. This is the area between the open and the close. Today, let's look at silver futures from Tuesday, October 8th. We see that the price gapped down dramatically on the open, but there was no follow through down. Instead, you had 4 bars with smaller bodies, and 3 of those bars were up. The first bar was slightly down, but then the next 3 had small bodies up. And then the last bar shown is a wide range down bar. Of note also on the first 4 bars is note the wicks on the top. This means price went up there, but price found sellers in every time it went above the open and above the close to send it right back down to the close. And the 5th bar is a wide range down bar, and this has the biggest body yet today. So it's the widest range out of the last 5 bars. The previous 4 bars. This is a sign of major selling, and that to me means probably more selling is to come. And that's exactly what happened. From the close of that wide range bar, that first wide range down bar, silver dropped about 80 cents from 0.1 to 0.2 on the chart. That's a huge move of about 2.5% in the silver market. And after this, down at the bottom after 0.2 is reached, you see 5 narrow range body bars that really go nowhere on the upside. Of particular note also here is they didn't even have the strength of buyers to send it above the last down bar's high. That to me is very telling. And then the last bar on this chart is the widest body down. That tells me it's a sign of weakness, and that from 0.3, you're probably going to have another leg down. Now let's move forward in time, and that's exactly what you had. You had another drop of about 40 cents in the silver futures markets from the close of that first wide range bar. And this ends with the widest bar in 3 bars, but it's up. That's the second green bar. So this tells me that this move is over and it's probably going to stall. And if you zoom out a little bit on the 5-minute, or if you show the overnight market, you'll note this last wave down is the 5th wave down. So Elliott wave principle says this move is probably over and you're ready to either stall or rally up a little bit. Next, let's zoom out and look at the 30-minute bar chart. Each bar here is 30 minutes of price action. There's 7 wide range bars which are highlighted here. Every day, silver's rally from $31.25 to almost $33.25. Every day has at least one wide range down bar. 3 out of the 4 days which made new move highs had wide range down bars. This is not a sign of underlying strength in the market. This is a sign of underlying weakness, that the market is setting up for a big move down. Note the prices are the highlighted bars. They all go below the open of the day. Well, they don't all go. I'm looking at days 2 and 3 that closed below the open, although it closed above the prior day's close. So you were up, but intraday you saw selling action. And then on the 5th bar, you had the wide range exhaustion top, I believe, with that spike high up to 33.24, and then you had the wide range down, and then it stalls. That was possibly the time to take profits on the long side and possibly get short. Next, let's look at the daily bars. Here are the daily bars of silver going back 4 or 5 months. We see that this recent price action is not only the highest level of this 4 months, but if you zoom out on a monthly or a big long-term weekly chart, you see this is the highest level for silver since 2012. So price went up here. You've got to be looking for some sellers to come into the market anytime it's making 12-year highs. Note the 2 bars marked with the red arrows. These are upthrust. An upthrust is an immediate rejection of new price highs. Silver had 2 of them at these 4-month and also 12-year highs, and each one was followed by a wide range down bar. Note the second one, which is highlighted with a blue circle. This was the widest candle body in 5 days, and the previous wide range bar was down. This market is telling you it wants to go lower, and that's exactly what it did, falling from 33 and change all the way down to under $30.50. Now, I'm not saying silver's going to keep going down. I'm a long-term bull for silver, but you follow these wide range bars action, and they will point the way. Thank you for watching. I hope you got something out of this. If you did, please like and subscribe. Let me know if you find this content useful and what I can do to make it better. Thank you so much.